the stock that we do need to talk about is Yes Bank, Avan. Let's bring up the intraday chart also, and you will see that the stock is down nearly 8.5% in trade. The stock is still available cheap, so that's 1 rupee 60 paise. However, 18 rupees 15 paise. The net profit, of course, falling 81% year on year. So let's touch base with Prashant Kumar, the top management. Top boss at the bank, to find out what exactly is going on, why the profit has gone from 266 crore rupees down 81%. Talk to us about the accounting of the ARC transactions, Mr. Kumar. You're overprovided by what? I'm looking at the figures, 3,000 crores. What's your estimate of the recovery? How much of it has already been accounted for in the quarter that we are in right now? Trying to get forward-looking statements from the markets also for you.
On the ARC transaction, if you see like almost 43,000 crores, okay, of the gross assets have moved to ARC, and the carrying value of those assets were somewhere in the range of 5,000 crores. But the valuation for those 5,000 is 8,000 crores upward. I think what we are seeing in terms of recoveries, every year we are able to recover or upgrade more than 5,000 crores. And this year also we are on this track. And so far we have been able to recover and upgrade almost 4,300 crores. So I think our guidance in terms of a recovery of more than 5,000 crore, we would be definitely exceeding this. But I think the portfolio, recovery always takes some time because there are always legal issues and the decisions have to be taken by the appropriate judicial forums. So I think over a period of 2-3 years, we would be able to recover fully.
What we've also, of course, seen is the Bombay High Court quashing the write-off of additional Tier 1, the 81 bonds issued by the banks. We'll talk about that in just a bit. You have said you will appeal at the Supreme Court. Now, unlike other banks, Mr. Kumar, what we start continuing to see at Yes Bank is provisioning going up. Others are in the recovery phase. Your provisioning is still going up. And in fact, there's again been a sharp uptick. What is causing this elevated provisioning, and when will this cycle end?
Most of our provisions, they are coming from the aging of our net carrying value of the assets which we are carrying in our balance sheet. Okay? Now, if you see that currently our net NPA is 1%, and the security receipts which we are carrying in our books, they are to the extent of 2%. So overall, the net NPAs and the security receipts, they are 3%, and it has come down from 3.8% for the previous quarter. So basically, this is the amount, which is 5,800 crores, where the aging provisions comes quarter after quarter. Sometimes there is a bunching of the provisions which happened in the one quarter. So I think this was one quarter where there was a spike because of the aging related provision. And the provision going forward is a function of both in terms of aging, but also this is also offset by the recoveries in this portfolio. So sometimes this is a timing mismatch. Otherwise, over a period of time, the recoveries would outpace the provisioning requirement of this pool.
Right. So there is a new challenge for you. You know, the Bombay High Court has disallowed the write-down of that 8,400 crore rupees of 81 bonds, right? So in your view, what is the worst impact of this Bombay High Court ruling on Yes Bank? Because I guess that is why you're seeing that big disappointment and hit on the stock price as well this morning.
So first thing, I think we have the legal opinions which gives us very, very strong grounds to challenge this decision before the Honorable Supreme Court, and that we are going to do. We are having 6 weeks to make an appeal in the Supreme Court. That is one part. The second thing in your question in terms of what could be the worst case scenario, first I would like to explain the terms and conditions of these instruments, which are the 81 bonds. First, these are the perpetual bonds. And this is the discretion of the bank whether to exercise the call option or not. So they are the perpetual. Okay. So it means they can continue in our books forever. That is one part. Second, again, as per the terms and condition of these instruments, again, this is the discretion of the bank to pay the interest or not, except in those situations where the bank is paying dividend to the equity holders. In those cases, definitely the bank has to pay the interest. Third thing, in these instruments, there is no cumulative interest payment obligation. It means in 1 year, if a decision is taken not to pay, then it does not accumulate in the going forward years. So I think this is what we need to appreciate, that these are the terms and conditions of these instruments. But in the worst case scenario, the only impact would be that our core equity would come down to the extent of 3%, and the AT1 would go up by 3%. So our overall tier 1 capital and our overall capital would remain the same. So we are not seeing such kind of impacts, and we have recently raised capital, and there is some amount of capital which is yet to come, which would be out of the conversion of the warrants. So we don't see any challenges. And another part which I would also like to share here, I think our bank have faced multiple challenges in the past, but I think the resilience of the bank in terms of meeting those challenges and coming out stronger has been proved multiple times.
Right. So Advent and Carlyle are the PE funds. They will eventually exit in the next 3 to 5 years. So what is, then the next 3 to 5 year plan that you have in mind?
No, I think these private equity players, they don't come for such a short period. Their time horizon, especially in investing in our bank, is a long term. So they are not like 3 years or 5 years.
So then what about State Bank of India as the lock-in expires in March 2023? Is there a concern for you?
I can't speak on behalf of any bank. They are the listed entities. But during our conversation with the various investor banks, I think we have been getting the confidence that there is no need to worry in terms of when the lock-in of the shares would be not there in March. So I think we are getting those kind of confidence.
With these investors on the board now, so what are the changes going forward? Also, a large portion of investors have locked in, which expires in March 2023. Is that a concern for you?
I think what we need to see in terms of with the infusion of the capital, with the induction of the two nominee directors, both from Advent and Carlyle, our board is a very strong board in terms of having board members having very wide experience across the financial system. And going forward, what you can expect from us would be a very, very consistent delivery, both in terms of business growth as well as in terms of profitability.
All right, appreciate your time, Mr. Kumar. Thanks for joining in and sharing with us that outlook. So whole portfolio recovery, that's going to take 2 to 3 years. And as of now, the only impact is going to be on the core equity. That's the stock as we flagged off, languishing in trade, lower by about 8%.